Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Time for this week's top stock picks. I'm Kevin Cook, and my top pick is Penumbra. All right, so let's take a look at Zacks number one ranked Penumbra. I profiled this company in early January just because I think it's an incredible medical technology story. Penumbra, as the name implies, Penumbra means shadow. And this is the company that deals with preventing that terrible shadow in the brain after someone has a stroke. They're able to go in with catheters using a technology called aspiration, where they can basically vacuum out a blood clot out of someone's brain. This is amazing technology. I've loved this company for a long time. I always recommend buying it on dips to 150, and we got a pretty decent one in the past year. Let's take a look at the estimates real quick. Let me move this out of the way. So this is a $10 billion company. And in 2022, sales estimates, almost 13% growth, almost got to 850 million. We'll actually get the report. We'll get Q4 final numbers on the 23rd of February, I believe. But here's the growth that analysts are looking at in 2023. 19% growth to crack 1 billion for this in-demand technology. And profit-wise, here we are, 2022, profits fell back quite a bit, down almost 80% for the year. But we're looking at a big snapback. So making 14 cents this year, looking for almost $1 in 2023. Now, part of the reason it continues to be a Zacks number one rank, even after the estimate bumps following they reported in November, their Q3, is that analysts have been looking closer at the numbers and they've been raising estimates. So let's just take a look here. You can see we have analysts raising estimates as recently as the past week. And if we take a look at the details on that, the most recent consensus, somebody raised to 102, but the high estimate is 116 versus the consensus of 98 cents. So, you're looking at a potential beat here on the number that gets reported in about a week. And, the stock has run quite a bit. So I just want to, clarify. Let's take a look at the last beat. The last beat was 200%. So let's put this in perspective of how much has been priced in, how much goodness has been priced in. So here's a weekly chart. Nice run in 2021. Out of the pandemic lows, as these procedures are considered more vital and not as elective because they're usually in an emergency situation with, pulmonary embolism. I had one once. It's where you get a blood clot in the lung. I had a broken leg, blood clot in the right leg, traveled up to my lungs. So normally the treatment is blood thinners, but Penumbra has technologies that are going to be replacing blood thinners and be more localized. So, the stock, when I talked about it last time in early January, we were just breaking out of this $225 area, broke above it nicely after that. And we've had this decent run here. So a lot of goodness is priced in. So here, the reason I want to review this again so quickly ahead of earnings is this: if you own the stock, I would continue to hold and look for this new upside towards $300. And I'll show you where analysts have moved price targets recently. If you don't own it, then you want to have this on your radar and look for the opportunity after earnings if there's a pullback. Any pullback under 250, I think, would be a great long-term buy here. So let's take a look at a snapshot of recent analyst calls. This is courtesy of thefly.com. Back in late January, Piper Sandler initiated coverage with an overweight and a $275 price target. They pointed out that this market for vascular and peripheral dealing with blood clots, that sort of thing, where they use the catheter, that this is an $8.2 billion market. And, right now, Penumbra is only pushing a $1 billion of that. BTIG up their price target to 270, Truist up to 284, JP Morgan up to 285, and Deutsche Bank just last week raised their price target from 250 up to 297. That's a pretty big jump, and they were probably some of those new higher estimates that we've seen. I want to drill on the details here in some of these analyst calls because I think they're pretty interesting. If we look at the call from Truist, who raised the price target to 284, one of the things that they point out is they say that Penumbra is one of the few profitable double-digit top-line growers in medtech. So at medtech as a space, this is one of your few double-digit top-line growers. And so they continue to see mid-teens revenue growth in 2024, and they like the new product launches. And then the analyst at JP Morgan pointed out that doctors are converting, again, as I mentioned before, to mechanical thrombectomy in deep vein thrombosis, which is you get deep vein thrombosis, which is what I had in my leg once. And, that's basically a blood clot that's going to go straight to your lungs and give you a pulmonary embolism. So they like the mechanical thrombectomy there. And, they just see the path to growth is all to Penumbra, as a leader in the space. So that's why I wanted to review Penumbra now ahead of the numbers to show you what analysts have been doing lately, why it's still a Zacks #1 rank as they bump estimates and revenue targets into 2023 here with a clear outlook. All right, look forward to that earnings report, and we will talk to you soon. All right, now it's time for Dave Bartosiak, also known as @Bartosiastics on Twitter, with his top pick for the week.
Well, thanks for that pick, Cooker. I've got another top stock pick of the week for you. It is Axos Financial, ticker AX. Let's take a look at Zacks.com and see why I like it. So Axos Financial is Zacks rank #2 buy with a Zacks value style score of B, growth in C, and momentum of B to help it round out with a VGM composite score of B. It is in the financial miscellaneous services industry, which happens to be in the bottom 33% of our Zacks industry rank, but I'm not too worried about that. Coming off of a decent surprise, 12.2% upside surprise there for the stock. Now, let's take a look at some of these growth numbers, which have been pretty good. 22.5% revenue growth for the current year, 8.5% for next year. That's great. You don't typically see that on a financial. Current year EPS growth 15.13%. Next year 8.14%. So those are all really good numbers. And if you see here, you have 4 analysts upping the ante for next year's numbers, taking it from 496 all the way up to 526. If you look at the current year, we've gone from 468 up till 487. That's on the heels of 2 ups and 1 to the downside. My favorite chart, of course, is the price consensus and EPS surprise chart here on Zacks.com. You get so much information just from one chart. And one thing you really want to point out here, first of all, look at all these earnings beats. Just the stock is always beating earnings. Has not missed since 2019. Oh, sorry. Yeah, 2019. So that's a long time. Here's the other thing I like about it. These estimates have continued to go to the upside, even while the stock retreated a little bit. That's the sort of divergence I like to see, divergence between earnings and the stock's price. And that, my friends, spells an opportunity. And there you have it. That is my top stock pick of the week for Cooker and I and everybody else here at Zacks.com. I want to say thank you for checking out the show. But you still need to check out Zacks.com/promo for this week's deal on our Alternative Energy Innovators portfolio. Thanks again for watching, and we'll see you next week.